Have you ever noticed that everything feels more expensive these days? From groceries to petrol to rent, prices just keep rising. But why does this happen? Is it random or is there an economic reason behind it? So, I'm going to explain inflation and how RBI controls it in the simplest way possible. So, what exactly is inflation? Inflation simply means a continuous rise in prices over time. If something cost rupees 50 earlier and now it costs rupees 60, that increase is inflation. But the deeper idea is that your money slowly loses value over time. When inflation rises, your purchasing power falls. Purchasing power means how much you can buy with your money. If rupees 100 earlier could buy you 5 items and now it can only buy you 3, your purchasing power has reduced. There are two main reasons that why inflation happens. First is demand pull inflation. When the demand in the economy is higher than the supply, too much money chasing too few goods. Second is cost push inflation when production becomes expensive. For example, if fuel prices increase, transportation becomes expensive and companies increase product prices. Now, who controls inflation? In India, inflation is controlled by Reserve Bank of India or the RBI. RBI is our central bank. It manages money supply and controls interest rates to keep inflation in check. Repo rate. Now, what is repo rate? It is the interest rate at which RBI lends money to commercial banks. When banks needs funds, they borrow it from RBI and the RBI gives them at repo rate. So basically, how RBI exactly controls inflation? When inflation is high, RBI increases the repo rate. When repo rate increases, when repo rate increases, banks borrow at higher cost. Loans become expensive, people spend less, demand reduces. Inflation slows down. It's like applying brakes to the economy. And when inflation is low, if the economy is slow, inflation is very low. RBI reduces the repo rate, loans become cheaper, people borrow more, spending increases, businesses grow. This boosts the economic growth. So, this is not just theory. Repo rate actually affects your home loan, EMI, car loan, startup funding, job market, and even stock market. So, inflation and RBI policies directly impact our daily life. Inflation is not just rising prices, it is a signal about the health of the economy. And RBI plays the role of a referee here, trying to balance growth and stability.